We continue with dissolution of the firm part 3. In the previous videos you learned how to prepare the realization account and pass the 6 entries. In this video we are learning how to treat the realization expenses, also known as dissolution expenses. For realization or dissolution expenses, you need to check in the question who is bearing those expenses and who is paying those expenses. If the expenses these are borne by the firm, you need to debit realization account. And if the realization expenses are borne by the partner, you need to debit the partner's capital account. Then you need to check who is paying for these expenses. If firm is paying for the expenses, you need to credit bank. But if partner is paying for the expenses, you need to credit the partner. If in the question you are not aware of who is bearing the expenses, it's always the firm and therefore you always debit realization. And if in the question it does not tell us who is paying for this, then it's always the firm, so you always credit to bank. Sometimes in the question they might say firm is paying on behalf of the partner. So this means that partner is bearing those expenses and now firm is paying for it. So the entry is, since partner is bearing those expenses, partner will be debit, and since firm is paying for it, so firm, that is bank account, will be credited. So entry will become partner's capital account debit to bank. There could be some more situations for realization expenses, and you might be asked journal entries. So another scenario could be a partner was to get 25,000 including dissolution expenses, and they give you that dissolution expenses or realization expenses are 15,000. So is 25,000 includes this 15,000. So let's break up into smaller things in order to get my entry. So 15,000 is my dissolution expenses as mentioned. So this means 10,000 is the remuneration he is getting. So for remuneration you always pass the entry realization debit and partner credit. For this dissolution expenses I need to check now who is bearing it and who is paying it. Now in this question the firm is getting the money, the realization expenses back from the firm. So this means the firm is bearing these realization expenses which was initially paid by the partner. So since it is borne by the firm, realization will be debit, and since it's paid by the partner, partner will be credit. Let's look into the second one. Partner was to get 25,000 which includes dissolution expenses also, and now in the sentence it says dissolution expenses were paid by the firm. In this scenario it was not mentioned that who had paid it. Here it is clearly mentioned it is paid by the firm. So again I will break this 25,000 into dissolution expenses of 15,000. So remaining is 10,000 for remuneration. So for remuneration the entry becomes realization debit to capital. That's the entry for remuneration always. For dissolution I will have to check who pays and who bears. It's clearly mentioned it is paid by the firm, so it's paid by the firm. And who is bearing it? Sentences like this means it's borne by the firm. You can compare it with the previous sentence. Here also borne by the firm, here also borne by the firm. But in this case it's clearly mentioned paid by the firm, but in this case it is paid by the partner. The third scenario is when partner is getting a remuneration of 10,000 plus he is getting dissolution expenses of 15,000. So for the remuneration expenses of 10,000, pass the entry realization debit to partner, and for the dissolution expenses, pass the entry necessary entry. So in this case again I will check who is bearing it and who is paying it. Since you are reimbursing it to the partner, these dissolution expenses, so the final payment, the final burden is borne by the firm, right? And this was initially paid by the partner which is now reimbursed to him. So it is initially paid by the partner but actually borne by the firm. So entry will be, since it is borne by the firm, so realization debit, and it was initially paid by the partner, so partner credit. There's another sentence which says dissolution expenses were 20,000. Since you have arranged with him that you are going to pay 15,000 for dissolution expenses, and if partner ends up spending 20,000 on dissolution expenses, firm has nothing to do with 20,000. Firm will only reimburse 15,000. The fourth situation is partner is to get 10,000 for remuneration and 15,000 for dissolution, and he accepted furniture for this. So since his liability, whether for dissolution expenses or for remuneration, is getting settled by an asset, therefore no entry for it.